Great Britain pound to the US dollar had a really nice trend continuation pattern during this bullish trend, right? So on the daily here, we can obviously see that we are in a whoopsie daisy. We can see that we are in a bullish trend here. Okay, we're making higher highs and higher lows here. High, low, higher high, higher low, higher high, higher low, higher high, and higher low, right? So it's very clear that we are in an uptrend. And when we're in an uptrend, we want to take trend continuation trades, okay? And to do that, we want to be taking, in a bullish trend, we want to be taking trades in support levels, okay? And the best way to do this, right, with the highest probability is going to be taking buying opportunities on previous highs that are now acting as support. So what I mean by that is we're in this uptrend and we have a high here and then a low, okay? But we want to be taking buying opportunities at support levels. You should only look to take buys at levels of support. That's going to be your highest probability there. So we want to look inside of this high that's going to be acting as a support. So what we're going to do is when this high gets broken, as it did right here, it got broken by that big green candle. We're going to now draw this as a support level, just like that. And now our best trade winning probability is going to be to take a buy when price comes back down into this level here. Okay, so when price comes back down into this level, we're going to be looking for a buying opportunity on the lower time frame, and in this case it's going to be like the 1 hour, 4 hour. Okay, so on the 1 hour we ended up having a really nice, beautiful inverted head and shoulders pattern. Okay, unfortunately I was not able to take this trade, but I was able to look back on it and learn from it. So here we have the left shoulder here, the head right there, and the right shoulder there. Okay, so I'm going to go ahead and draw this. We have left shoulder, and then we have our head, and then we have our right shoulder. This is that head and shoulders pattern. And there's two ways to trade this. So we have an aggressive way and like more of a conservative way. So I'm going to go over both right now. So the more aggressive trade would be trading the right shoulder at the level of the left shoulder. So the left shoulder is here. We're going to go ahead and just draw a line and then wait for the right shoulder to come down. Once that right shoulder comes down into that level that we have marked, what we're going to do is we're going to wait for a buying opportunity. And in this case, we have a bullish engulfing candle at that level. Okay. Now this is a little more aggressive because price could always just come down, go down and break that level. And it's not really like a confirmed right shoulder. Okay. So we want to wait. If you want an aggressive entry, you're kind of entering at that right shoulder where it's not confirmed yet. The conservative entry is going to be when that right shoulder has been confirmed and we get a break in the neckline. But going over that aggressive entry is this engulfing candle here, right there. I'm going to go ahead and lower that. That's a big arrow. All right. So that engulfing candle formed, and then that's where we would take our entry. We would take a buying opportunity at the close of that engulfing candle. And then our stop loss is going to be below the wick of that engulfing candle. So right there, about a 20 pip stop loss. And our take profit is going to be at least a 2 to 1, right? So we have a 20 pip stop loss. Our take profit is going to be 40 pips, which is going to be that right there. Okay. And that would have been a win. Okay. So now the conservative entry is the break of this neckline here, of this head and shoulders, the break of this neckline, and then we wait for that retest. Okay, now on that retest is where we're gonna enter the conservative entry. So in this case, we have our break and retest, which is within these three candles right there, and then we're gonna enter on the bullish candle after the retesting candle there, and then our stop loss is going to be below the wick here, 28 pips, and then our take profit is a 2 to 1 at 56 pips right there, right? In this case, 56 pips is a lot. I would gradually be like moving my stop loss higher and higher, eventually to break even. And then once we get that 1-to-1, I will start to move that stop loss in profits. 50 pips is a lot, so that's how I do that. And what that looks like is a 1-to-1. So once we get like 28 pips in profit, I'll start to move my stop loss to break even. Maybe close like 20% of my position, something like that, right? It just reduces risk more because 56 pips is a big movement in the market. Yeah, so that is the conservative entry here, and then the aggressive entry down at that right shoulder. So this was a great trend continuation pattern here that happened on the 1 hour on Great Britain pound to the US dollar. Like I said, unfortunately, I wasn't able to capitalize on this because I didn't take the trade. Wasn't looking at the charts then. So yeah, that is the inverted head and shoulders trend continuation pattern. Hope you guys learned something from that. I just wanted to go over it. It's a great learning opportunity for you and myself. And with that being said, I'll see you guys in the next video. Like, comment, and subscribe.